start with a simple way people usually think about banks. When most people hear the word bank, they imagine a single place, one institution that keeps their money, gives loans, and helps them open an account. That mental picture works in theory, but it does not reflect how India actually functions. India does not run on one kind of bank. It runs on a system made up of many different types of banks, each created for a specific purpose. Each type operates with different powers, different limits, and serves different sets of customers. Some banks handle full service banking, some exist mainly to move money, some are designed to bring people into the formal financial system for the first time. Together, these banks keep India's financial system running at scale, and every one of them operates under the supervision of Reserve Bank of India. In this episode, we'll break down each type of banks, understand what it does, why it exists, and what it can and cannot do. So let's begin. Let's begin with public sector banks. These are the banks that are owned by the Government of India. Banks like State Bank of India, Bank of Baroda, and Punjab National Banks have been part of India's banking journey for decades. Their role is straightforward but critical: to make banking available to everyone. It does not matter whether someone lives in a large city, a small town, or a remote village. Public sector banks are meant to be present everywhere. In terms of service, they offer full range of banking products: saving accounts, loans, credit cards, pension, government schemes, and agriculture finance all flows through public sector banks. These banks are trusted because they are backed by the government. And that trust becomes most important when banking is not just about profit, but about national priorities. Schemes like Jan Dhan accounts, direct benefit transfers, and pension programs rely heavily on public sector banks to reach people across the country. Their strength is not speed or cutting-edge innovation, their strength is reach and stability. That is why public sector banks sit at the core of Indian banking system. Now let's move to private sector banks. These banks are owned by private companies. These exist to bring speed, technology, and better customer experience into banking. Think of HDFC, ICICI, and Axis Bank. In terms of service, private sector banks do almost everything that a public sector bank does. They accept deposits, provide loans, issue credit cards, and operate branch networks across the country. The real difference lies in how they operate. Private banks place a strong focus on efficiency and customer experience. They invest heavily in technology and digital systems to make banking faster and smoother. This is why they are often known for quick service, strong mobile apps, easy onboarding, and modern product designs. They tend to attract customers who value speed, convenience, and seamless digital banking. Public sector banks brings the stability to the system, private sector banks bring speed. Together, they balance each other and keep Indian banking system working smoothly. Now let's talk about small finance banks, often called as SFBs. This is a very important category of bank, but it is often misunderstood. Banks like AU Small Finance Bank, Ujjivan, and Equitas were created for specific reasons. They exist to serve people and businesses that large banks often overlook. This includes auto drivers, shopkeepers, micro-entrepreneurs, gig workers, low-income households, and small businesses in smaller towns and cities. In terms of service, SFBs can do regular banking. They accept deposits, open saving accounts, and give loans just like any other bank, but they are also given special responsibilities. They are expected to focus on small ticket size loans, lend heavily to priority sectors, and serve customers who have little or no credit history. They are also expected to expand banking access in underserved and semi-urban regions. Because of this focus, SFBs operate under a tighter controls. Their expansion is limited in the early years. They are not allowed to take on high-risk investment banking activities. Their loan books are closely monitored by RBI. Small finance banks are designed for inclusion, not for scale. They sit between NBFC-style lending and a full commercial bank, filling in an important gap in India's banking system. Now let's look at Payments Bank. This is one of the most unique banking models in India. The simplest way to understand Payments Bank is this: they help money move and not money grow. Banks like Paytm Payment Bank, Airtel Payment Bank, and India Post Payment Banks were created to make everyday digital transactions simple and accessible. Payments Bank can open saving accounts but with limited balance. They issue debit cards, support UPI and IMPS, and process millions of transactions every day. They also play an important role in enabling cash-in and cash-out service through wide agent networks, especially in the areas where full banking access is limited. At the same time, payments banks are intentionally restricted. They cannot give loans, they cannot issue credit cards, they cannot accept large deposits or offer complex financial products. This is not a limitation by accident, it is by design. Payment banks exist to make digital payment easy for every Indian, especially for the ones who may not have access to traditional bank accounts. They are not the lenders, they are the enablers of India's digital payment system. Now let's move to regional rural banks or RRBs. These banks exist for one clear purpose. They are meant to support the rural India. Banks like Karnataka Gramin Bank, Kerala Gramin Bank are designed specially for this role. Regional rural banks bring together three important strengths. They have government ownership, deep local knowledge, and a strong focus on rural needs. They primarily serve farmers, small rural businesses, self-help groups, village households, and local entrepreneurs. Their services are closely aligned with the rural life. They provide agriculture loan, Kisan credit card, basic saving accounts, and help deliver subsidies and government payments. Unlike large commercial banks, RRBs do not try to expand across the country. They operate within a specific region and focus only on communities that they understand well. They also stay away from large corporate lendings and high-risk activities. Their role is simple but essential to make sure banking reaches even the deepest and the most remote parts of India. Now let's talk about cooperative banks. These are part of India's banking system that many people use, but very few people truly understand. Cooperative banks are built on a simple idea. They are banks that are owned and run by the members. Instead of being owned by the government or a large corporation, they are structured as cooperative societies, usually serving specific communities, professions, or regions. Banks like Saraswat Bank, Cosmos Bank, and Shamrao Vittal Bank fall into this category. There are also thousands of smaller urban and rural cooperative banks operating across the country. These banks are especially strong in local lending. They serve small businesses, traders, housing societies, local entrepreneurs, and community-based customers who often prefer dealing with a familiar or local institution. In terms of service, cooperative banks look very similar to a normal bank. They accept deposits, give loans, and offer basic banking facility. But structurally, they are very different. They operate under a dual control system. Their banking activities are regulated by the RBI, but their management board and governance are controlled by the state government under the Cooperative Society Act. This makes them a unique part of India's financial system. They're deeply local, community-driven, and important for regional economies. At the same time, this structure also makes them very different from a normal commercial bank. Finally, let's talk about foreign banks. These are the global banks that operate in India under the RBI regulations. Banks like HSBC, Standard Chartered Bank, and earlier Citibank fall into this category. The primary role of a foreign bank is to connect India with the global financial system. They focus on areas such as foreign exchange, trade finance, corporate banking, wealth management, and cross-border transactions. Their customers are typically multinational companies, large corporates, and high net worth individuals with global financial needs. Foreign banks operate under a strict regulatory conditions in India. Their branch expansion is limited, their retail presence is relatively small, and they are closely supervised by the regulators. They are not designed to be a mass market bank, but they play an important role to bring global expertise, international best practices, and cross-border capabilities into the Indian financial system. So let's bring everything together. Public and private sector banks handle full banking service for the country. Small finance banks focus on inclusion and serving the customers who are often left out of the traditional banking. Payments bank focus on transaction and making digital payments simple and accessible. Regional rural banks focus on rural India and ensure that banking reaches villages and smaller communities. Cooperative banks serve local community traders and small businesses through member-owned community-driven institutions. And foreign bank connects the India to the global financial system. Each type of bank has different role and different responsibility, but together they form the backbone of India's banking system. And all of them operate under the regulation of RBI. Though some categories like cooperative banks also come under the state government oversight. Now that you understand how India's banking system is structured, it becomes much easier to see what comes next. Banks are only one part of RBI's world. The other major part is NBFCs. NBFCs power lending for millions of people and businesses across the country. They finance home, vehicles, small businesses, consumer purchases, and many fintech partnerships that operate behind the scene. But NBFCs are not banks. They work under a different set of rules and different design to solve problems that banks do not always address well. In the next episode, we'll break down the entire NBFC universe, understand why each type of NBFC exists, and see how they fit into the Indian broader financial system. If you want to continue learning through this series, I also share notes and updates by email. You can join my email list using the link in the description. That is where I share updates whenever a new video goes live, along with additional context that does not always fit into the video format. Subscribe to the channel, join the email list, and I will see you in the next one.